Funding for Market Journal is provided by the Nebraska Soybean Board.
America's export of soybeans helps the U.S. maintain a positive agricultural trade balance. Nebraska contributes half of its soybeans for export. The protein and oil content in soybeans enhance the growing demand for higher protein diets. The Nebraska Soybean Board promotes research to develop new soybean varieties with higher protein and oil content for major agricultural markets. The Nebraska Soybean Checkoff, growing opportunity from the ground up.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. This week, Tina Barrett reports Nebraska producers had another record net farm income this year. Matt Spangler details the use of DNA technology in the beef industry. And Dave Aiken outlines a plan that would affect farmers using the Platte River as an irrigation source. Our marketing analyst this week is Frayne Olson from North Dakota State. On Monday morning, we talked with Frayne about the wheat harvest outlook, global supply, and current market trends.
The crop tour we had earlier this season, as it went through Kansas and southern Nebraska and into eastern Colorado, it looked like we were going to have a fantastic wheat crop. The expectations were very high. Unfortunately, the weather hasn't always cooperated with everybody, and the top end has been taken off those yield expectations. So the current reports coming out of the winter wheat harvest is yields are good, but again, there's areas that have suffered some additional shortfalls because of high temperatures and low rainfall. So if you're lucky enough to catch the rains at the right time, yields are pretty good, but if you missed a few of those key showers, the yield potential has been down.
And obviously this is playing into what goes into the world supply, and there are concerns that the supply overall in the global scheme is going to be short. Do you have that same concern?
There are a combination of things going on the world stage. We do have some good world carryover stocks, some reserves that we can pull off of if need be. And earlier this season, again, we were looking for some very high yield expectations, not only coming out of North America and the U.S. in particular, but also out of Europe and into the Black Sea region. And the weather has, again, not cooperated as well as everybody was expecting, and we're starting to take the top end off that yield potential globally as well. So the current yield expectations on the world stage are also coming down, which should be supportive for prices.
Right, let's talk about that. What can that do for exports from the U.S.?
Well, again, as I showed last time we met, export pace out of the United States is very heavily dependent upon some of the things that are going on in our competitors or internationally. And one of those areas we need to follow very closely has been that Black Sea region. And understanding the Black Sea region has had some problems. They've had some issues with dry weather. They did catch some rain showers to help support their efforts, but that will continue to be watched very, very closely. We also have to be careful to separate that region into the two main growing regions. One of them is the winter wheat region, which is more in the Black Sea itself, in the eastern portion, and the western portion, which is really the spring wheat region, is a little bit better shape, but again, the crop development hasn't been as advanced as it is in the winter wheat region.
And what are you seeing from Canada, Frayne?
The Canadian progress, they were a little bit slow to get started, slower than we were here in North Dakota. They had some cooler weather and some rain showers come through, but they've essentially wrapped up their planting progress now, and the crop is in pretty good shape. The extended forecast looks like they will have a little bit warmer and drier conditions, which will help the Canadian crop. Again, with the development. In North Dakota here, we made very rapid planting progress. We were able to catch some rain showers, so even though the crop is very young right now, the yield expectations are pretty good.
Let's talk about the battle between fundamentals and the economy in this market. And we've talked about it numerous times in the corn and soybean market as well. But how do you see what's happening here at home with unemployment rising to 8.2% last week and the concerns in Greece and Spain weighing in on what's going on in the wheat market?
And there is this battle going on between the fundamentals, the supply and demand conditions that are looking more positive for wheat and grains in general. and some of the general economic conditions that are happening not only in the United States but also internationally. The jobs report didn't help us much. There was the expectation that that would be a little bit stronger than it was, put a negative tone into the investment community, and of course the investment community now has become a major player in the grain markets. So if they think that there's optimism and they're looking for riskier investments and think that the future is more optimistic, they tend to come into the grain complex and we see prices rise. So there's this conflict between supply-demand conditions and what's happening economically. The other thing, and again, it's been in the ag news as well as the general economic news for quite some time, is what's happening in Europe. There's some important elections coming up in Greece in the middle of June now, and we'll have to be watching that very closely to try and get a direction on what kind of austerity measures may or may not take place in the Greek economy. And there's also more and more focus now on the Spain's economy, which is a bigger economy in the context of Europe than the Greek economy. So there are some things we really do need to watch, and it's also very difficult to try and figure out which is playing a greater role in the marketplace. Is it the general economic conditions or is it the supply-demand conditions?
Quickly, Frayne, the extension of CME hours and ICE hours, how is that affecting trading?
For the farm, at the farm level, we really haven't seen a lot of changes yet, but those changes will be coming. At the trader level, these expanded hours have really raised a lot of questions. In particular, how is the trade going to handle these important USDA releases? Because we're now going to have the markets open during those release times. So there's still some debate on how that's all going to be taking place.
Next week, Elaine Cubb from the ARC Group will give us her thoughts on how the June crop report will affect corn and soybean markets. Fittingly, we move from markets to farm income. When Tina Barrett from Nebraska Farm Business joined us last year, her surveyed group of producers had a record net farm income of $285,000 on average. That number was drastically higher than the 2009 number of $180,000. But the 2011 average net farm income produced a number that was far and away a record.
You know, another record income, and I really didn't expect to see it. I didn't know what for sure we'd see, but you know, the producers that we work with managed to take advantage of some good crop prices. They had great yields, and we ended up with an average net farm income of about $400,000.
That's a huge jump.
It's a huge number. You know, I looked back 10 years, and our average was $25,000. You know, we were thinking that was pretty good. I remember the year we hit 40, thinking that was really a great year. So, you know, this is just kind of an unbelievable number. You know, and we got to remember that there's a lot of things that go into that number because we don't try and take a look at their other investments. So, you know, you think about these farms and they have, you know, millions of dollars invested in assets, whether in land or in equipment. And part of this money, you know, this income is a return on that investment. And so we've got to kind of remember that too, that there's an awful lot more than just their time and labor out there earning that $400,000.
And as you mentioned before we talked, there could be some gain in the livestock industry as well. That maybe it's not all on the crop side, that maybe the livestock side caught up and narrowed that gap.
Right. You know, I think there was certainly some of that. It was a much better year from a livestock standpoint than what we saw in the previous couple of years. I think, you know, beef prices certainly took a rise and helped make up for those high input costs that they had been experiencing. So there was definitely some gain to be had there too. Let's
talk about those input costs. The cost of production continues to rise as well?
It does. Our average cost of production for a bushel of corn rose 40 cents to about $3.95. So, you know, we're seeing those, even though we're seeing net income rise, we're seeing those cost of production rises as well. So,
and family cost of living continues to rise as well.
Oh, always a big story, but you know, in our history, I don't think we've ever seen a drop in average family living, but we're up to about $125,000 for family living in taxes, and if we include savings and non-farm real estate purchases, we're talking about $180,000 that's coming out of the farm for family living on average now.
Is there a correlation between that and the rise in net farm income? Do they go hand in hand?
Oh, I think, you know, anytime we see a rise in net farm income, we usually see a rise in family living costs, and I think just the fact that there's more money out there, that, you know, there's been more stuff. You know, there's more houses going up, there's more vacations being taken, you know, there's more money to spend, so it's easier to spend. The drawback is, you know, since we rarely see that drop, if we do see the drop in net farm income, we've got to be watching that family living and maybe thinking that we need to pull that back.
So as we talk about record high net farm incomes, what are we looking at in terms of managing debt that goes along with it?
You know, a lot of times, you know, you think if these numbers keep going up that we would see a significant drop in debt. And we are seeing a drop in debt to asset ratio, but we're not seeing a drop in total farm debt. We're seeing that continue to rise. It's gone up over $800,000 this last year on average. You know, and I went and looked at those numbers and did not see the drop, or there was actually a drop in long-term liabilities. So this isn't real estate purchases causing that debt to go up, but we're seeing that increase in intermediate debt and current debt.
Which means what?
Well, my best guess is that this is a sign of tax deferrals, and that, you know, there's a lot of equipment being purchased and written off with the accelerated depreciation that we've got and being financed, paid for later. The operating notes are probably going up because we're doing more prepaids, holding more grain over to the next year, those sorts of things. Because we just look at that debt level as of the end of the year. So I would guess that we're seeing a trend in tax deferral. In
the Cornhusker Economics, you wrote about cost of production. How has that changed? The importance of it changed from a time when it was an incredibly tight budget to spend with, and now where you have such high incomes?
Yeah, it's certainly a question I get asked a lot as to why farmers need to worry about cost of production right now. But, you know, I think if you see that trend line increasing, we're getting back to where you need to start thinking about that. And depending on where your family living and taxes are, you could easily be getting to the point. I have some producers who are getting to the point where their cost of production, including those two factors, is getting close to marketing prices. And so I think it's really important for people to come back to the reality that, you know, the margin is going to be tight, and we're going to need to watch that on an individual basis, because not everybody's going to be making money, even in crop production.
Right, and I remember the last time you were here, you talked about the competition. And what advice do you give to farmers? Because it is a competition between who gets that next parcel of land, not necessarily in terms of marketing, because that's sort of on your own. But what do you say to them?
You know, I think it's tough because farming has always been a community sort of, you know, thing, but and it's hard to think of your neighbor as your competitor. But when it comes to parcels of land, whether it's purchasing or renting, you really are in competition with those neighbors. And, you know, if you can manage your cost of production lower than your neighbors, it puts you at a competitive advantage for being able to be in position for that purchase, or that, you know, maybe paying a little bit higher rent, and doing that in a sound financial manner. So, you know, I think as much as we don't want to, it's a factor in production agriculture today. The
USDA estimates net farm income across the country to be $91.7 billion in 2012, down 6.5% from the 2011 forecast. We don't hear about it often, but poisonous plants can be found in pastures in Nebraska, which can make cattle sick. University of Nebraska Lincoln Extension range specialist Jerry Volesky identifies which plants can be toxic in pastures and rangelands.
Now, these plants, these poisonous plants, they can vary across the state in terms of the different pasture land and rangeland conditions that they're growing. For example, in our sandhills, we often see things like real ground cell, or occasionally some of the crazy weeds that are poisonous. Other parts of the state, sometimes we'll see hemlock in some of their wetter areas, or wet meadow types of areas that are poisonous. And then also in the western part of the state, things like prairie larkspur. Those are probably some of the primary species that we have, or most common species we have in Nebraska.
Fortunately, Valesky says we don't see many cases of livestock poisoning in Nebraska, but farmers and ranchers should still be on the lookout. The 4th Annual DNA Technology Conference will be held June 27th at the Meat Animal Research Center near Clay Center. We recently talked with UNL Extension Beef Genetics Specialist Matt Spangler about the conference, how DNA technology has progressed, and why it's important to the beef industry.
For the beef cattle industry, it allows us to identify young sires that maybe haven't produced any progeny yet, that actually excel what our expectations are. So it's a way to add information very early in an animal's life, and then be able to make more informed selection and breeding decisions.
So in a way, you're looking at the possibilities of what the genetics can do in the future?
That's exactly right. As we get more information, our confidence in how good or bad an animal is increases. The problem is getting that information takes a long time. With DNA, we have the ability to garner additional information much earlier in life. That speeds the rate at which we can make genetic change, and it also enables us potentially to make genetic selection decisions on traits which we really can't measure. Things like feed intake or feed efficiency, disease susceptibility, some of those that are economically relevant but expensive to measure.
How long has the technology that you're using today been around? What's the history of the DNA technology?
DNA technology in some form or fashion has been around for decades. However, it's evolved considerably since then. We started out with what we might call candidate genes, maybe just a handful of markers, and now we're using in the beef industry what we call 50K based genomic predictions. So that's information based off of 50,000 genetic markers, and we're beginning to sequence animals, getting millions of markers across the genome.
How is it done? Because you can say, well, we have this, this, and this, but how is it actually accomplished?
Exactly. So a producer can collect a DNA sample on an animal. It could be hair follicles, blood, semen, an ear notch. DNA is extracted from that, and then we genotype them with an assay, and the assay that I'm talking about would give us 50,000 reads or 50,000 data points, and those are genetic markers across the bovine genome.
How widely used is it across the state, across the country?
It's beginning to become used more heavily. In the research community, it's used considerably, but some breeds now, such as Angus, Simmental, Hereford, Limousin, other breeds are actually incorporating this information into their EPDs, and so we're seeing an increase in the frequency with which it's being used in the industry.
Large cattle producers and small cattle producers alike?
Both can benefit. We really see the initial onset as being nucleus breeders, those that produce seed stock to go out and breed animals. But actually the end user becomes the commercial cattleman that's buying bulls that have increased information. So it impacts the beef industry at large.
Let's talk about the conference. It's coming up on Wednesday, June 27th in Clay Center. What's going to be covered here? Why is it beneficial for producers to go?
We're going to cover a wide array of things. Because this arena is far from stagnant, we do this annual meeting and try to update producers. We'll talk about what breeds are using this information, how they're using it, what traits like feed intake and feed efficiency, how that might be impacted in the future, and then novel things such as a new deletion that was recently discovered that impacts fertility in beef cattle. And then also a crux of this technology has been price, but we're going to share some new research with you that has dramatically decreased the price of genotyping several-fold. And they're short presentations meant to benefit the academician, but particularly producers. We get in, tell you what you need to know, and then allow some time for Q&A, and I think it's extremely beneficial.
Again, the conference is Wednesday, June 27th at the Meat Animal Research Center near Clay Center. Registration is needed by June 11th. You can find out more information on the beef.unl.edu website. Kurt Wilkie of Columbus farms in the flood and erosion-prone Shell Creek watershed of east central Nebraska. In the June Nebraska Farmer, you can read how he and other watershed farmers have benefited from conservation cost sharing from federal, state, and local agencies. Wilkie has installed 5 different soil and water saving practices on his sloping fields and received payments for each practice to help offset the costs. But as detailed in the June Nebraska Farmer, that cost-sharing program runs out at the end of 2012. 2 natural resources districts have proposed irrigation changes to the Platte River that could help provide water for recreation and endangered species. But the plan would change how farmers supply water to their crops. UNL Extension Ag and Water Law Specialist Dave Aiken says the plan could work, but it's far from finished.
Well, the state of Nebraska is under a legal obligation to provide new water in the Platte River to meet endangered species requirements. And us water folks have all thought that the only way you could do that would be to take water away from irrigators and drying up irrigated land in the process. But now 2 natural resource districts have come up with a proposal that would maintain existing irrigation and provide a large amount of water back to the system for endangered species. So it's kind of having our cake and eating it too.
So they're finding the water, but they're not using surface water. They're going to use groundwater. So there's a difference there. You got to pump the groundwater. Where does the money come from to build that infrastructure that's not already there?
That's right. This is a big proposal. A lot of irrigators would go from using surface water from Lake McConaughey. They would basically give up that surface water and go to wells instead. And they're talking between 400 and 450 irrigation wells and center pivot systems. So that's $35, $45 million. That's a lot of money, right. And a lot of irrigation wells, and a big change in irrigation practices from surface water irrigation to groundwater irrigation.
That big bill, who pays the price for it? Who picks up the tab?
Well, the NRDs are proposing to pay part of it, And whether it's a big part or a little part or a medium-sized part is kind of to be determined. But that's, I think, is a lot of what the negotiating will be about. How much of this bill will the NRDs pick up?
Let's talk about the water itself. First, the surface water. Where is all the saved surface water that you're going to save in this plan? Where does it go? How is it going to be used?
Okay. The water that is saved would be used to leave more water in Lake McConaughey during the summer so that it's there for recreation, and which is it. And Lake McConaughey is a big tourist draw in the summertime, so that would be part of it. And then part of it would go to endangered species, in the spring or in the fall when they need it for the, when the birds are migrating or something like that. So, and it would also help use to generate hydropower. So, there's a lot of different uses that could be enhanced if this proposal is successful.
The groundwater that would be used obviously needs to be recharged. How do you recharge that then? Because that's another concern.
That's a big concern. And the groundwater basically came from, the water from Lake McConaughey shooting down these canals, which are largely unlined, and it's, fairly sandy soil, so a lot of the water leaks out. In fact, to deliver 1 unit of water to a farmer in the Tri-County system, I might have to release 2 or 3 units of water from Lake McConaughey. So a lot of that water is lost before it gets to the farmer. And it's not totally lost. It ends up, going into the groundwater, and that's where as a recharge. And that's what they would look at now. Now the farmers would pump the groundwater, but then it would be recharged. They just don't have to worry about recharging it during the summertime when the demands on the water are the highest. They can recharge it in the winter or in the fall or maybe even in the spring, when it's available and there's not as much demand for it.
In the off season, essentially.
That's
from
right.
Irrigation. What's the legality of this?
Well, there would be some significant water right changes that would have to be approved by the state, and there'll be a lot of technical work that needs to be done in order to justify these water right changes. Changing the surface water rights from a direct irrigation from the storage water to converting that water to a groundwater recharge water right. But we have the laws set up to do that, but it would be a significant process to work through.
The big question: does the plan work?
Well, we don't have all the engineering details yet, and there are probably more technical studies that need to be done. But conceptually, it should work. And the question is whether or what it will take to get the irrigators in the Tri-County district to switch from that Lake McConaughey water to the groundwater.
Their biggest concern with that would be?
Well, losing their water rights, and then, how much of this am I going to have to pay? Am I have to pay for the well and pivot myself? I mean, I'm already irrigated. Why should I pay double, in essence, to be irrigated? But is the NRD going to pick up the whole tab? Probably not. So somewhere in between.
There's a dance to be done.
That's right, and this will be a multi-year process, even if everything goes well.
The districts will make a presentation to public power irrigators on the 22nd, but as Aiken says, the plan will take time to complete. And now to forecast the next 7 days, here is UNL Extension statewide climatologist Al Dutcher.
Well, folks, here we are again. It's time for the weekly weather forecast. And before we get to the forecast, of course, let's look at the conditions over the last week. We did see a cool down earlier in the week, and we've seen some scattered thunderstorm activity as a trough moves into the Pacific Northwest, develop over the Panhandle region. Now, this is some of the more significant moisture we've seen in quite a while, and it still hasn't been as widespread as we'd like to see, but at this point in time, we'll take any moisture we can get. Now, in terms of the latest drought monitor, we are starting to show a dramatic increase in the dryness across Nebraska. We have moderate drought conditions across most of the Panhandle, outside a very thin sliver of northern portion of the Panhandle. We have drought encroaching into portions of southwest, south-central Nebraska, and we have moderate drought conditions that have now been painted for portions of extreme southeastern Nebraska. If the precipitation trend that is projected by the models continues for this weekend, we're not expecting nearly as much moisture across the eastern part of the state as was originally forecasted a couple days ago, and therefore we may actually see more northern progression of that dryness issue as we see next week's drought monitor. And we're starting to also get some pretty significant reports of stress right along the Kansas-Nebraska border in response to this increase in temperatures. Do we have any significant moisture in store? Well, most of it's going to come this weekend if it's going to happen, and let's take a look at the upper air models and see why the reason for that precipitation. And that is because we do have an upper air trough that is moving in and is expected to lift into the northern plains. So we will have some lift associated with this system. There's possibility of some scattered thunderstorm activity along what will be a cool front moving through the state, particularly on Sunday. but we should see some scattered thunderstorm activity across the panhandle, very isolated, but at least there's a chance for precipitation. We're looking at highs in the upper 80s across the northwest to possibly even the mid-90s across the extreme south and southeastern Nebraska. Now as we go into Sunday, this system is going to lift out, and that's going to push a cold front slowly through the state and give us a shot of precipitation, although most of the moisture and energy remains to our north. We'll be looking at highs in the northwest somewhere in the low 80s, and as we get into southeastern Nebraska before the front passes through, we'll probably touch the low 90s. Now as we go into Monday, this system slowly moves its way into the Great Lakes, and we start to see some of that cold air filtering southward. So we'll be looking at highs right now in the mid to upper 70s across the northeast, although that might be just a little too cold. And we'll be looking at pretty much highs in the mid-80s across extreme southeastern Nebraska, with precipitation coming in during the second half of the day. Now as we go into Tuesday, we're going to see that trough moving to our east, and we're going to start to get a slight northwestern flow in the upper atmosphere, bringing in some cooler, drier air into the region. We're looking at highs primarily in the mid to upper 70s across the north to the lower 80s across the south. Very short-lived cool down, because by the time we get to Wednesday, we see the ridge trying to lift back in, and we'll be looking at highs primarily in the low 80s across north and northeastern Nebraska to the upper 80s across southwest Nebraska. As we go into Thursday, the ridge starts to build even farther. We bump the temperature up 5 degrees or so. We're looking at highs in the mid-80s across the northeast to the low 90s across the southwest, with a chance for isolated thunderstorms across the panhandle region. As we go into Friday, another trough moves in. Very warm conditions start to move into our region, and we might start to see an increase in the humidity levels. We're looking at highs in the upper 80s across the northeast to the mid-90s across the west. The 8 to 14-day forecast, which includes next weekend, indicates a trend for above normal temperatures continues, and we have an increasing chance for precipitation as the weekend progresses.
Thanks, Al. You can follow us anytime and anywhere on Twitter and Facebook. To see any shows you may have missed, you can log on to the Market Journal homepage at mj.unl.edu. Next week, Elaine Cubb is our marketing analyst. Cheryl Burkhart-Kriesel will show how some rural Nebraska communities are using agritourism to support themselves. Lowell Sandell will discuss weed resistance, and Brad Lubin will outline the Conservation Reserve Program. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
A diesel-powered engine on a farm works hard and operates in a grueling environment. Soy biodiesel fuels stand up to the challenge of powering farm equipment, but are also renewable and environmentally responsible as well. The Nebraska Soybean Board is committed to encouraging the use of soy biodiesel to protect the environment and sustain Nebraska's agriculture. The Nebraska Soybean Checkoff, growing opportunity from the ground up.